I specifically am looking at price to sales. And the reason why I'm doing that is because a lot of times you can value a company based on price to earnings. But the problem with price to earnings valuation is that some companies, they don't have big earnings, right? So, for example, if you were to value Amazon using price to earnings ratio over a longer time period, you would not have gotten a very good result because it would have looked always very, very expensive to you. But if you're looking at it on a price to sales ratio, it looks different. And the reason why is because Amazon, for the longest time, would simply reinvest their money. They on purpose kept their earnings low or even negative in some cases because they just want to keep reinvesting into the company. So it made their earnings look very small, even though their sales were jumping like crazy, right? So that's why I kind of like the valuation of price to sales rather than just looking at price to earnings. I think it gives you a little bit more of a clear picture. And I actually did this analysis on Palantir versus Google versus Apple versus some of these other ones, and we put together a little table. Let's see if we could get that to show up here. And there were a couple companies that are like, you know what, they're great companies, but do I really want to own something like, for example, Palantir? I think it was 100 times sales. Like that was just absolutely ridiculous. Right, let's take a look at this here. So Palantir, right at the top of the list, right? This is Michael Burry. He was actually talking about shorting this company, and I kind of agree with him, right? Look at this, 115 times sales. You know, for a company to be worth that much, we're talking about they need to be 10xing their revenue like every year for the next couple of years, or else this is just insane. Like if you're not doing 10x your revenue every single year, this is completely absurd. And maybe they'll be able to do that. It's not impossible. It's possible that could happen, right? But what's the probability that's going to happen, right? And then also, if we're talking about the scenario that might happen from Ray Dalio's "How Countries Go Broke," what he talks about is because we're in a different situation right now, we might actually see when the Federal Reserve lowers interest rates this time around, we might see interest rates actually go up rather than down, right? Because what happens typically is when the government cuts interest rates, they will lower short-term interest rates, right? They'll lower the overnight lending rate to banks, right? Which then influences the 1-year rate and the 10-year and the 30-year rate, right? And usually they all come down, right? However, when you're in an inflationary environment like we are right now with the government debt where it is and all that kind of stuff, also, we lost a big debt buyer through China. China's no longer buying a lot of U.S. debt. And they would usually buy the long-term debt, the 30-year and things like that, or the 10-year, when we're in a scenario like that, if a shock happens and the Federal Reserve lowers interest rates, it's very possible that long-term interest rates go up rather than down, which would be very unusual, but has happened in history many times before when countries were in similar situations to us, right? Where because the Federal Reserve lowers interest rates, which lowers rates across the whole board. However, long-term rates go up because of inflation expectations. So if inflation goes up, then long-term rates go up. And if long-term rates go up, companies like this get hammered. These things get hit very hard because all of their money is not coming in today. It's coming in a year, in 5 years, in 10 years. You're expecting this thing to grow, right? Which is okay, even if the company doesn't get affected and it's still going to grow very quickly, then you're still going to have a problem because these cash flows are being discounted at a higher rate going out further. So Palantir, to me, that's right on the chopping block. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.